Welcome, everyone. I am so incredibly pumped you're here with us today. Look, if you've been feeling like the whole personal finance world is just this massive, tangled web of confusing jargon, or maybe you're a young professional, right, just stepping into the workforce and thinking, how on earth do I actually build wealth? Well, you are in the exact right place. Today, we're diving into a comprehensive explainer on the absolute best financial strategies for beginners to build wealth and actually plan for the future. We're completely cutting through the noise and mapping out a real, step-by-step, actionable path to manage your money in today's crazy, fast-paced world. So get ready, because we are literally about to engineer your financial destiny. Just stop for a second. Seriously, ask yourself, what is your financial picture going to look like in 2026? Picture this. You're sitting in this sleek office, looking out at a glittering city skyline. You open up your banking app and you just feel total, complete peace of mind. Zero stress about bills, no panic attacks over sudden emergencies, just steady, growing wealth, right? Well, that reality doesn't just happen by accident. It's built on purpose. And this explainer, this is your actionable, step-by-step blueprint to actually get you there. Okay, let's dive into this. Here is the agenda for our financial glow-up today. 1. The 2026 Wealth Blueprint. 2. Mastering the 50-30-20 rule. 3. Building your emergency fund. 4. Smart long-term investing. And finally, 5. Passive income and retirement. All right, starting things off with Section 1, the 2026 Wealth Blueprint. Moving right along to Section 2, Mastering the 50-30-20 rule. 50-30-20. Listen, if you take only one single concept away from our entire time together today, let it be this one. It is a deceptively simple, yet incredibly powerful framework for exactly how every single dollar that hits your bank account should be deployed. Now, what's really interesting about this is how you break it down. Imagine taking your monthly take-home pay and just slicing it into 3 strict lanes. Half of it, 50%, goes strictly to your needs. We're talking rent, groceries, keeping the lights on, the absolute non-negotiables. Next up, 30% goes to your wants. And yes, this blueprint actually wants you to enjoy your life. You can absolutely still stream your favorite movies and grab that iced coffee. And finally, that golden 20% slice, that is dedicated exclusively to savings and investing. Think about it. If you take home $4,000 a month, that is $800 literally buying your future freedom. It takes some discipline for sure, but keeping your expenses in these 3 lanes, it creates an incredibly balanced financial life. So how do we actually execute that split? You just follow an exact progression of actions. Step 1, track your expenses. Let's be real, you probably check your phone 50 times a day anyway, right? So just open up your banking app and see exactly where your cash is leaking. Once you've carved out that 20% saving slice, you jump immediately to Step 2, building your emergency fund. And you do that before you ever graduate to Step 3, which is where the fun really starts: investing. Which brings us perfectly to Section 3, building your emergency fund. So the crucial point here is understanding what this actually is. An emergency fund is basically a safety net of cash saved specifically for unplanned financial crises, okay? It is not money for a weekend trip to Vegas. It is definitely not money for upgrading your phone. To put this into perspective, did you know that over half of Americans literally cannot cover a surprise $1,000 expense? Crazy, right? This fund ensures you aren't one of them. It is the absolute bedrock of your financial stability. It's literally your defense against the unexpected. I want you to really think about the emotional relief, that deep security that comes from knowing you have cash just sitting in the bank, fully ready to deploy. If your laptop completely dies right before a huge project, or your car's alternator blows up on the highway, it's merely a temporary inconvenience. It's not a full-blown crisis that forces you into crippling credit card debt. Cash is your shield. It protects your overall wealth journey, so you never ever have to take a step backward. Let's move to and see how this builds into Section 4, smart long-term investing. I know the investing world can sometimes sound like a completely alien language, so let's demystify it. An ETF, or exchange-traded fund, is simply a bundled basket of different investments, like stocks, that are traded on an exchange. Think of it like walking into a massive grocery store. Instead of risking all your money trying to pick the one absolute perfect apple, you just buy a pre-made basket that contains a tiny little piece of every single fruit in the store. That is exactly what an ETF does with stocks. It is beautifully simple and it's highly effective for long-term growth. And the reason ETFs are so absolutely brilliant is because they automatically give you diversification. Diversification basically means spreading your investments around to limit your exposure to any single asset's risk. And look, this isn't just some fancy Wall Street jargon. This is a strategic defense mechanism for your hard-earned money. Look at it this way. If you throw all your cash into one trendy individual stock and that company totally tanks, your wealth vanishes. But if you spread it out across hundreds of different companies, one failure barely even makes a dent. So let's quickly summarize the key pillars of smart long-term investing. First, buy individual stocks very cautiously. It's incredibly risky trying to pick winners. Second, utilize ETFs to get that broad, sweeping exposure to the entire market. Third, commit to long-term investing. The market's going to have good days and it's going to have bad days. You have to ride it out for years, not days. And finally, always prioritize diversification. And that brings us to our final phase, Section 5, Passive Income and Retirement. And this brilliantly illustrates the ultimate shift we really want to achieve here. Active income is basically trading your time for money. It's your standard 9 to 5. If you stop working, all the money stops flowing. Passive income, on the other hand, is making your money sweat for you. When you buy ETFs and just hold them long term, they grow and generate returns whether you're grinding at a desk or literally just lying on a beach somewhere. Emphasizing these long-term strategies shifts you entirely away from a life dependent on active income toward a future fueled completely by passive income. That, my friends, is what true financial freedom looks like. Just imagine the timeline of your financial life compounding over time. Day 1, you simply open your app and track your expenses. Easy. Over month 1, you successfully lock in that 50-30-20 budget. Fast forward to year 1, your emergency safety net is now fully funded. Then jump ahead 10 years of consistent ETF contributions, and you're starting to see massive long-term investment growth. And after 30 years, you've officially achieved your wildest retirement goals. You've built a towering city skyline level of wealth, step by step, year by year, literally just by sticking to the blueprint. So I want to leave you with this final, incredibly important question. Are you ready to start building your 2026 wealth blueprint today? Because you've got the tools now. You know the 50-30-20 rule. You understand the power of an emergency fund, and you see the brilliant simplicity of ETFs. The entire modern financial world is right there at your fingertips, just waiting for you to take charge. So pull out your phone, take a hard look at your budget, and take that very first step towards your ultimate financial freedom. Thank you so much for joining me for this explainer, and honestly, I cannot wait to see the incredible financial futures you all build.